This is Alan Bush with the Daily Financial Forecast for Tuesday, July 5th. Starting out with the stock index futures, just to recap what has happened over the last week or so, we did see a very severe downturn in global equity markets with the Brexit vote on June 23rd. A lot of fears that the global economy would weaken and a lot of talk that it would be the end of the world, but apparently it is not the end of the world, since stock index futures only being down 3 days after the Brexit vote have now come back substantially, and the UK stock market advanced to 10-month highs. So not only did it recover all of what it had lost, but it continued to work higher. Now once again at 10-month highs for the FTSE UK stock market. So our feeling is that nothing has changed as far as the long-term outlook for stock index futures. Interest rates will remain low, and in light of the Brexit vote, the Bank of England is already taking steps to ease credit conditions, all of which is very supportive to the global equities markets. So futures down though today as energy prices come under some pressure. Also, we had a couple of reports, durable goods, factory orders, both on the weak side. But I think we're likely to stabilize a little later this morning. I think that we'll probably see at least some recovery later this afternoon. The main trend once again still appears to be higher, and we are looking for new highs for the year within the next month or so for S&P 500 futures. Now moving over to the currency markets, just before the Brexit vote took place, the pound had advanced to highs for the year. Since then though, with the vote going to the Leave campaign, we did see the pound coming under severe pressure and then falling to now today to a 31-year low against the US dollar. And I'm inclined to think that we'll probably see a little more pressure developing, as it is anticipated that the Bank of England will probably ease credit conditions further, which would be bearish for the British pound. Also the flight to quality currencies, the yen and the dollar advancing. We would expect to see this trend to probably continue. And in the credit markets, as analysts believe that G7 central bankers are likely to add more stimulus following indications that the Bank of England will be easing, we have seen very good gains in the credit market, especially at the long end. And I think this is a trend that will probably continue. I would expect a sideways higher market for the credit markets in light of anticipated more easing from global central banks. Also, if there is more easing, which we're very confident that there will be, that means down the road more inflation that directly benefits gold and silver. So any weakness that we see in those markets, the precious metals, should be used as buying opportunities. So once again, our favorite longs are stock index futures and gold and silver to the long side. So good trading, everyone, and once again remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.